all of this?
That's a good question. It's a matter of how many properties can we find, and can we continue to work with our capital sources? We find it is becoming increasingly difficult to find great properties to purchase. I think we aim to do about one a quarter. From a bandwidth perspective, we are balancing what we have now, getting the job done. I think as we grow and take on more opportunities, we'll definitely be building out a team, getting some key people to help us as we execute.
So now it's basically like, so on the leasing side, I knew you're taking the lead. Is it basically you and you, or do you have other? Do you have a team of any kind of staff or team?
I do. So in addition to Denali, I'm the principal and founder of Rise Property Group.
Right.
We're a local commercial brokerage. There's 9 agents on the team, and we specialize in sales and leasing of commercial properties. So it is myself as the primary agent on it, and on our previous projects and on this one, we'll have a team of 2 or 3. So that way we've got a lot of manpower behind our prospecting, never miss a tour or a phone call.
And Sandy, another type of bandwidth. Jason and I are pretty young. We are ambitious, and our goal is to, turn these projects. So once we lease them up, most of the projects you're going to see from us are not like the sleepy, quiet projects that are going to, have a very, very little upside. But it's usually going to be vacant projects that were not properly taken care of in the past, and we can create a big pop for ourselves and our investors, and we will exit. We will either refinance them or sell them, return the money to the investors so that we can move on and go to the next project. So we're not necessarily we don't have a goal to accumulate a portfolio of a gazillion square feet. For us, it's more about, we want to hit the singles and hopefully also a couple home runs, and then move on to the next one.
I assume at some point you want to go beyond raising money deal by deal. You want to, if all goes well, to raise a fund, I assume, right?
When we grow up.
When you grow up, yeah. So I don't know what your time horizon is on that. Obviously, there's no certainty in this stuff. I get it, but yeah.
That's what the big boys and girls do.
Right.
Any chance you guys can shoot over the PDF again? I'm having a hard time.
Well, I could find. I got this device open. I could get my other.
I'll grab it. Yeah, grab it.
Just search for. Where did it come out from? I can't remember. It came out from Denali, or it came out from Jason, or I can't remember.
And we can resend that.
It came from investors.
Yeah. Okay. Yeah, I took a look at it. It looked interesting, obviously. And Herr Crenshaw just continue to get a reasonable amount of interest.
We are. Fundraising has gone tremendously well. This is actually our fastest project that we've done so far. As of this afternoon, we're over 60% in commitment.
We have, I think.
My question was, and I don't want to dominate everything. I don't know how many people are on now. But, all right, a lot on it. You'll get to. Okay, fine. I'll stop. Yeah, if you guys are ready to start, go ahead and start.
Absolutely. Michael, are we ready to kick this off? Or you want to give it one more minute?
Jason, let's do it. Let's get started.
All right. Does everybody have their screen pulled up? The fact you're not logging out, I guess, is a good sign. So welcome, everybody. It is November 23rd, and this is our formal investor presentation of 1420 Ready Road, an industrial facility in Cumming, Georgia. My name is Jason Chaliff. Michael and I are the founders, principal members of Denali. I've been in the real estate business pretty much my entire professional career, first as a commercial lender with Wells Fargo and BB&T, and later on as a commercial broker and owner. I've got a local brokerage company called Rise Property Group. We're a team of 9 agents that do sales and leasing transactions throughout the Southeast. We've worked with Denali on our first 2 acquisitions and leasing, and my team is ready to go on this one. And I'm excited for you to join us today.
And I am Michael. I am Jason's partner and also co-founder of Denali. I am originally from Russia. That's where I was born. And I moved to America 6 years ago. I actually became a citizen last month. So I'm excited to be part of fully established here. Real estate has been my passion for the last 5 years. I have worked at an Atlanta-based private equity firm where I was doing the asset management and acquisitions management. So I learned, cut my teeth in that industry, and then started with Jason Denali, where do effectively the same thing. My personal passion is construction. I love renovation. I love being on site, and I love to work with my plumbers and electricians and roofers to clean up buildings. And this is really truly a passion of mine. I can't spend enough time on those construction sites when I get a chance to. I'm also working with Jason on the asset management side, finance. It's a big part of my
I think does somebody have their mic on?
Yeah, if you guys could mute yourself. Thank you. So I am working on the monthly reports that we love to share with the investors, and we love to communicate as much as possible. So within Denali, that's part of my responsibilities is to make sure that we do proper reporting and on a frequent basis. And hopefully, as we lease up projects, then also I am in charge within Denali to do the quarterly distributions to investors that we manage. So today we wanted to take about 15 minutes just to walk over the highlights of Ready Road. We call this project Forsyth Business Center. So you will see us using both names, the street address, as well as the name Forsyth Business Center. And we wanted to then after the 15 minutes, give you plenty of time and opportunity to ask us any possible questions. We are available anytime, and of course today. So maybe Jason, you want to start with the overview?
Absolutely. So we thought we'd started off with an aerial shot of the property, 1420 Ready Road. Currently, it is occupied by a single tenant. They are a metal pipe manufacturer. It's a national company. They're going to vacate at the end of the year. We're acquiring this building as a single tenant. Once they leave, we will have a big empty box. We'll jump into how we will demise it later in our presentation. Something we wanted to show you in this photo, if you look towards the top right, you see some really nice townhome product. What we found, this is a very affluent neighborhood, very high incomes, high college education, a lot of professional jobs. And we're very excited to go into a market that is growing exceptionally and has some of Atlanta's most affluent families. So we'll jump in to the project. We plan on adding value by demising this large single tenant building into 8 or 9 suites. What we found in our research is that tenants pay a premium to get into the market. Just the cost to get a small suite in an industrial building with roll-up doors or dock access, tenants pay a significant premium, about $3 or $4 per square foot for suites that are smaller, maybe 8 or 10,000 feet compared to the 80,000 that we're working with today. We really like the demographics of Forsyth County. On the most recent census, they've had 43% population growth. It continues to grow rapidly. We're about 1.5 miles from Georgia 400. And the market is very strong. The immediate industrial neighborhood has limited vacancy. We are actually unable to find available space nearby. And overall in the North Fulton Forsyth market, industrial rents are north of $10. The area is very strong economically. Unemployment is about 3%. household incomes exceed $140,000. So all of that makes the Forsyth market very compelling, as well as the opportunity to really add value to this building by making it more accessible for the smaller businesses that really populate the North Fulton Forsyth market.
So in terms of the investment, this is a $8.8 million deal, of which we are raising $3.5 million. As of today, we are about 65% there. So we're still raising about $1 million or $1.5 million for out of this 3.5 million. It is going to be formally acquired on December 29th, but we will be calling for capital around December 19th, so that we can close by the end of the year. And we are targeting very conservatively, and this is maybe something that Jason's background is the reason for. Jason is a banker in his former life, so he's very, very conservative with all the underwriting. In a very conservative viewpoint, we think we can achieve a 15% annualized return on investment with a 1.45 equity multiple, and that would say if somebody invests $100, they would get $145 back at the end of, if we have to keep it for 3 years. And that's the idea, that we will keep this project for 3 years. We will hoping to lease it up based on the current market condition and the lack of industrial product and the growth of industrial as an asset class. We hope that we can make this project much shorter than 3 years, which will obviously very positively affect the returns, because the returns go higher, and since the longer we take, the lower the returns are. We are having a loan from a local bank, Renaissance Bank, that will be at 3.25% interest rate, a 3-year loan for about 60% of the total. So it's a roughly $5.3 million loan and $3.5 million equity. You could see that here in the sources and uses calculation. A big item here, you would see that the CapEx, which stands for capital expenses, and interest reserves, 2.4 million. This is a huge number. We try to be very conservative and have a lot of money reserved, because currently renovation costs, construction costs are just skyrocketing, and we want to make sure that we have plenty of contingency reserve to be able to pay the increasing cost of labor and material, and shortages and shortage of material and labor, which will require interest reserve, since we will need to pay interest on our 3.25% interest on our loan. So all in, this is an $8.8 million project for us. And while this might sound high, we are going to show that currently the market has just reached, is close to reaching a $200 per square foot in terms of replacement cost and trade and values. So we hope that after the renovation, after all of our reserves, and we hopefully not going to go over, but are going to be able to have some savings here, since we tried to be very conservative, that we will be able to be significantly below replacement costs in terms of how much it would cost to build this type of a building over right now. Part of my passion is the renovation and the construction, and here are some views and pictures of kind of before and after with inspiration. So this is a 50-year-old industrial building that has always been occupied by this pipe manufacturer. They love this building, but they're leaving, and this effectively, we're taking a building that is in a good condition, but it's not super pretty. So repainting the building, giving it a little bit of a fresher look in terms of monument sign and tenant signage, and also giving it some building identity through a spray painted numbers of the suites will hopefully refreshen the look and make it much more appealing. Currently, the office, there is a small office section. Right now, it's about 10% office and 90% warehouse. We will keep that, if not even reduce the office. So we will continue to keep this building as an industrial building. And we are targeting the plumbers, electricians, roofers, contractors, AC contractors that are all need to be close to their customer market. Atlanta and the northern suburbs of Atlanta have been exploding in terms of population growth. There was a 43% population growth over the last 10 years, and it continues. I feel like half of Boston, Chicago, New York continues to move down here. So we'd like to target and present smaller spaces that have small office and then a large warehouse with a dock high door for their trucks and their box carts in the back, so that we are targeting the 10,000 square foot small suite tenants instead of what the market currently. The market is tight, so there is neither small nor big spaces, but we are looking for small suite tenants because these plumbers, electricians, contractors, they're not having as much leverage over us. We can use our lease forms, we can push higher annual rental rate bumps, we can push higher rental rates, we can have much more landlord friendlier leases, and we just have the control in terms of diversity, and not everyone expires on the same year. We're going to have a diverse rental of different tenants in different industries. So it will be the goal for us is to subdivide this building into 9 suites. Maybe you can show the next slide. So this is a preliminary plan, how we wanted to subdivide this building into the 9 suites. And you could see that the smallest will be around 6,000, the largest will be around 14,000 square feet. These edges and lines are not 100% fixed yet. We obviously working with the existing 10 dock doors and roll-up doors. And then we plan to add about 3 more doors to this building. These doors had been there before, but obviously it's not been used for so long, so we will need to replace many of them. It will undergo a heavier renovation, and the idea is that the bottom of it will be the parking and the front entrance of the building, and the rear will be where the docks and the trucks will be able to pick up and deliver the products for these different tenants. Next one.
Thank you, Michael. Let me jump in. I'll take this slide. So we've talked a lot about the growth of Forsyth and North Fulton County. And we think this really helps illustrate a lot of the space constraints we're seeing in the market. Some of the highest priced markets in the country, Boston, New York, DC, LA, San Francisco, they're working with tremendous natural barriers. Manhattan is an island, you can't add to it. Forever, Atlanta has been a market like Dallas or Houston, just big and wide, and you can keep growing forever. And Atlanta really has. It stretches between Alabama and South Carolina. What we have found in this specific northern submarket is that there are 2 very large natural barriers that prevent future development. Everything to the east of Forsyth County is Lake Lanier. You can't build on the lake. So anybody that would look east for more affordable rent is going to be very disappointed, and they'll have to travel south and then up 85 to get up to the Hall County Gainesville corridor. Similar to that natural barrier, north of the Forsyth market in Dawson County starts the North Georgia mountains. With all those elevation changes, it is very difficult to build new industrial product. So in addition to Forsyth County becoming more affluent, becoming denser, if you look to the north and you look to the east, there are 2 tremendous natural barriers that will concentrate future growth in Forsyth County. We also show on this slide, if you just look traveling north up Georgia 400, the last 10 years have been 10 years of tremendous growth. As we've mentioned a few times, Forsyth County has grown 43% on the last census. And if you look at some of the other northern suburbs in North Fulton, like Sandy Springs and Milton, they're growing at about 20% and becoming increasingly affluent, with home prices going up about 40% over the last 10 years. So overall, this is one of Atlanta's strongest markets. Home prices continue to climb. It continues to get denser, and there are incredibly huge costs to future industrial development So to work with existing product, we see a lot of opportunity to fill this up. Continuing on about the demographics of the area, the household incomes in a 5-mile radius exceed $140,000. In that 5-mile radius, the population has grown about 50% over the last 10 years. The northern part of Alpharetta, the Windward Parkway area, has several new developments. Halcyon is coming in. The HP office on Windward Parkway is being redeveloped. So we're continuing to see more professional jobs come this way. People that live in Forsyth County and North Fulton that don't want to travel to Atlanta, Buckhead, and Midtown for work. They want to stay in that local area. So we continue to see this market improve.
So we are using pretty conservative underwriting, we believe, and we are effectively going to be exiting this project at a 6 cap rate. We are seeing now trades in the Atlanta market below 4 cap rates. So there's definitely room for us to make this pro forma more aggressive, but I think we don't have to. It looks already good enough like that. And we are using about an 18 months lease up. So that it will take us 18 months to lease the 9 individual suites. And that gets us to a 15% annualized return on investment. In terms of lease assumptions, just an interesting item here. Market leasing assumptions, we are assuming an $8.51 average lease rate that we will achieve. And recently, the rents have exploded, and we are seeing now full-size building being rented for an $8 number. The reason why we're going for a smaller suites is to achieve much higher rental rates. We used $8.51 to be conservative, but we believe that we're probably going to start listing this property with numbers of $13 or $12 triple net per square foot, and then having sufficient room to go down to a pro forma number. So we will always try higher. We're only going to have once in 3 years or 5 years to set the rate. So we'll try high, and it looks like the market right now is willing to take that high number.
So going through our sold comps, what we found in this market is that pricing per square foot is at $100 or well above it. And it doesn't really matter if the product is vacant or leased. And oftentimes what is very interesting, we've only seen it recently in this market, is buildings can be worth more dead than alive. And the fact for that is if you had signed a lease 8 or 10 years ago at a $5 rate with 20 years of options, you've got that building for a very long time at rents below market. So owner users and investors understand this, and they're actually paying a premium for vacant buildings. Owner users, they can immediately go in, but investors, because they're able to raise the rents to market, which would not be achievable if there are existing tenants with long-term options. Part of what makes it difficult to really understand what people are paying in this market for industrial facilities is that a majority of the large trades have been part of portfolios. This is good news and bad news for us. What we like about it is it shows that a very high price per square foot is achievable in this market. We've seen several buildings, and you see those on the lower section that trade over 140, 150, all the way up to 190 a square foot. What does cloud this, and we can't use them as exact comps, is that these are part of much larger portfolios. But it is a very good sign that these large institutions want this product, they like this market, and that they're willing to pay high prices to achieve it. Continuing on to the sales comps. As Michael said earlier, my background as a banker makes me believe nothing will ever happen. And if it does, it's going to be way less than that's happened before. So we did find, and CoStar validated, a market rent for North Fulton Forsyth of $10.34 per square foot. And we were able to replicate that in our comps. And we're finding asking rents above $10 triple net. When you look at modified gross, the OpEx is typically about 125 to 175 per square foot. So you can add that back in, or sorry, add that back in to get to your net rate. And we're seeing asking rents in this market well north of $10. And compounding that is a vacancy rate of 4%. So space moves very quickly if you're able to find it. And that is our presentation. Thank you guys for sticking with us through the whole thing. We'd like to open up the floor now to questions. We're happy to reference any slide we had tonight or any page in our deck. I don't know, Michael, if we have a special format for this or just fire away.
Anyone, please.
Jason, if I may, and Michael, you referenced that you think this is an unduly conservative case. So I'm curious what your upside case is if you achieve better rents, maybe get a cap rate of like 4%, what the outcome would be in the model.
Well, Matt, we like to be like under promise and overperform type of group. So I would not gonna want to put anything out there, but if you email me, I'm happy to send you a sensitivity analysis of different scenarios so that you can see it for yourself. But we'd like to stick to what we have put on paper. 15%, I think we'll be very, very confident with.
Okay. And then who is the likely buyer of this type of property once it's redeveloped?
That's a very good question, Matt. What we're seeing is very large institutions, DRA, KKR, Colony, PIMCO, Blackstone, all these guys have institutional funds and billions to deploy. And we are seeing them compete on single assets because they need that inventory. So I would surmise that our most likely buyers is going to be one of those big New York-based shops.
And so they're all listed down here as like 465 property portfolios and 111. So they're buying individual assets to load into future portfolios. Just okay.
They are.
Yeah, we actually barely were selected as the buyers group against such a private equity $500 million fund. All these big New York shop companies have built structures to be able to buy little deals in Little Georgia. It's something new that they were unable to do that in the past, but now we're competing with the famous Fortune 500 companies who have created subdivisions. They're buying single family homes across the country as well now. So our competition has changed from the kind of small, medium-sized companies in Atlanta to really national.
Got it. And is there any new capacity coming online soon or planned to be coming online soon in the area that would change the dynamics around the occupancy and the population growth?
Because of the costs of material and shortage of labor, it is now and the replacement cost of about $175 a foot if you want to build a building. Also, in these high growth areas, the jurisdictions, the little city used to be very, very NIMBY in terms of industrial. Industrial doesn't create that many jobs, especially it's a warehouse for a plumber or electrician, and it does not pay that much property taxes. So they don't like to approve those developments anymore. And the trucks, the noise, it's extremely, extremely hard. So that's why, as I've been in this industry for in Atlanta for the last 6 years, I have not seen any small multi-tenant building being developed over the last 6 years. And with what's happening in the supply chain, I don't see anything coming anytime soon either.
Yeah, hi, this is Sandy. Just a question on what do you see in this case specifically as the primary risks to achieving the goals that you project?
I would say our two primary risks are going to be construction risk and lease up risk. On the construction side, we have budgeted in that things take longer than they used to. Things cost more. than they used to. We plan on doing this all as permitted work. So we will need some time to get our approvals from the city to do what we need to do. But we have a good understanding of what it will take to get that done. And we have changed our budget to reflect the increases in construction costs. On the leasing side, a slow lease up or being unable to hit our pro forma rents would be areas of caution. But as we analyze this investment, we do forecast 10, 15% higher construction costs than we expected. And on the leasing front, we stay very conservative in our lease up timing and about a $2 discount to what we see in market rent. So hopefully that we will be able to be pleasantly surprised by getting this done on time and by leasing it above pro forma. And we like to think that by being conservative in our numbers, it helps us achieve that.
Hey, Jason.
Hey, Scott.
Hey, so for these buyers that down the road, do they look at the tenants themselves? Like, I mean, I know you'll get good long-term leases, but is there a look at what the quality of the tenants are as well?
Absolutely. They're looking, and they do understand that in this type of product, it's not going to be Coca-Cola next to Microsoft, next to Apple. But what they are good at doing is underwriting the leases, understanding the market, knowing where they can push people. They've got deep pockets, and they are more than willing to run out tenants that they don't believe are paying market rent. So these guys are buying with a very long-term view of the market. And if they don't like a local or a regional tenant, they've got the capital to wait them out over a long period. Does that answer the question, Scott?
Yeah, generally, yeah. Thank you.
I see David has a question.
Hi. Two questions. One is, what type of leases and terms are you looking for lengthwise? And two, talking about construction and permitting, do you have an architect that you've already engaged? Do you have a set of plans that you're working on? And what's the timetable for that, and an expediter? And what's the timeline moving forward for construction? And when will construction, do you think, be finished? Thank you.
I'll take the construction piece. So we have engaged an architect. We have bids from our general contractor as well as electricians. Still waiting for a few other bits of the sub, such as a roofer and the plumbing subcontractor. We are scheduled to meet with the city on Monday. And it's going to be a meeting between us and the architect. We want to find out what will be the most efficient and fastest way to get this all permitted. This is going to be a permitted project, so we will be this is the risk that we might get stuck in plan review for a couple of weeks. So we are on it, and we basically started already. We will start the actual physical construction on the day of closing, which would be December 29th. And we expect that the physical construction will take 90 days to complete. We won't do the entire building all at once. We will probably going to do 3 out of the 9 suites so that we get a feel for the market. Once we deliver the suites to the tenants, we get a feel like what they like, what they didn't like, and just so we can make adjustments as we continue to move forward and to renovate the future suites that we know. All right, everyone wanted a break room. They wanted more break room. We put 2 private offices, but everyone wanted 3 offices. So moving forward, let's make it make a small adjustments to our floor plan. That's the construction piece. And you also had a question.
Well, moving on that, the other alternative is to build custom, to try and find the tenants in advance and build, custom space for them instead of you waiting, be proactive instead of reactive, from hearing from previous tenants. Everybody has unique wants.
That's a great point. So from the the couple projects that Jason and I have been doing, we have seen that the small businesses, the plumbers, electricians, roofers, they're relatively standardized. They all want a couple private offices, luxury vinyl tile, LED lights, break room, and primarily a big warehouse with a dog high in the rear. So when we in the past have been asking them to make all these selections, what kind of LED light fixtures do you want? It took us so long to get answers from them, and it took out a lot of the steam, because then our renovation crew was gone. They were into another construction site, and it takes a long time to get them back. So we decided we might not be able to please every single tenant when we do the speculative build out, but we are able to buy in bulk. And with all the supply chain issues right now, we buy the floor that's available. It's going to be a modern, standard, gray, good-looking floor, but it might not please every single tenant.
Right.
And then we're so much quicker done. And then 9 out of 10 tenants will like it. And the one tenant that said they really wanted a different floor, they wanted carpet instead of tile or something, then we'll say sorry. Hopefully by then we're leased up. They will have to go somewhere else.
And the other part of the question, I think, was for Jason on what size and how long leases are you doing? Because obviously that will affect, when you go to sell this building at the cap rate and longevity. And did I hear earlier that all of these leases will be triple net? And so therefore you're putting all new utilities in every one of these suites. Okay.
Yeah.
And
We will.
So
We
on the
will look at-
construction piece, we are actually going to be subdividing the utilities, which is a big cost factor.
And I think to your earlier question, by subdividing it to smaller suites, there's only so many users that need 80,000 square feet in Cumming, or really in any given market. And when you have a vacancy that large, it could take 6 months, 9 months, maybe a year to fill. When you subdivide down to 8,000, 10,000, 12,000 foot suites, there are literally thousands of businesses in the market that already occupy space like this.
right.
So a huge pool of potential tenants.
That wasn't my question. My question was, I heard that. My question was, how long are your leases and what kind of renewals are you offering so
Okay.
that the next buyer, lives with those leases? So what's your plan on those terms?
Typically, we're going to go out and look for 5 to 7 year leases. Obviously, if we can get a 10-year lease, we will pursue it. What we're seeing right now for industrial space of this size is 3 to 7 year leases. We will do everything possible to stay away from 3 years. 5 to 7 is what we're going to seek out, and that's what we've been successful in getting on our other properties. We want to keep options to a minimum. Options really only exist in the tenant's favor, and buyers hate options because it limits their ability to increase rents over time.
Thank you.
Is there any other questions out there?
Hey, Jason, this is Mark.
Hey, Mark.
Hey, man. So, it's fair to say right now we just have a type of tenant in mind, but no actual tenants who have expressed enthusiasm for the space?
Correct.
That is true. We've had this property under contract really for about as long as we've had the deal out there, since Thursday. Because of that short time frame to execute, our initial efforts were towards packaging this deal, getting it out for our investors. Once we are raised, with permission from the seller, we will begin pre-leasing. It is a challenge because we won't have the space available till April, and a lot of these moves are done for the next month. So we have not identified any specific tenants now, but we do have a process that we've developed at Rise and in our 2 properties that we've done together of chasing all the local tenants in the market, posting it wide on all their major listing services, and making sure that the rest of the market knows that this space is available. As we previously discussed, there is no vacancy in this market. And we expect of the 80 or so tenants in this neighborhood, somebody is going to grow, somebody's going to downsize, somebody wants to renegotiate their lease terms. And these will all be key opportunities for us to add tenants to 1420 Ready Road.
Thanks.
Sandy, I see you have a question.
Yeah, are you guys co-investing in this deal?
We are.
We
We
are.
are 10% of the total. So we are, Jason and I are 350 out of the 3.5 million.
Great, thanks.
Jason. One more
Scott.
question on the deal. Are y'all required to guarantee the deal, you and Mike?
Michael and I are signing full recourse guarantees.
Sounds good. I love it. Thanks.
We
Yeah, me
don't.
too.
We don't love it, but we really like the deal. And we,
Well,
we
I'm glad you are, because you're getting the returns. That's good. So I guess I'll just ask, sorry, Jason. So just the extreme of the quality of the tenants, and this might be a real dumb question, but if you're qualifying the tenants financially or what have you to ensure that if you're signing 5-10-year leases, they can pay the lease, right?
yes.
Of course, we do full background checks, kind of like the way we used to do it at Wells Fargo. We want to see a personal financial statement. We want to see business financials. We run credit. We want to make sure that they're the right fit for our building. We tell a lot of tenants, even prior to the tour, that they won't be a fit if they have some sort of religious use, short-term use, or we don't feel that they're a good fit for the property.
Okay, thank you.
And our napkin calculation is when when a prospect tenant submits an application, we'd like to see that the annual occupancy cost, so rent plus utilities, internet, whatever we think of, that if that's all going to be $100,000 a year, would like to see that their business made at least $1 million a year in the last year and 2 years prior, so that they're at least 10x the total rent amount. That's kind of like our qualifier internally to see if the tenant is going to be stable and sustainable to be able to not fall behind on rent after we sign them.
So just Sandy, a follow-up question. Jason's comment about asking for personal financial statements, is the implication that you're seeking or requiring personal guarantees?
We would typically either have a corporate guarantee from either the company or a parent company that is of financial strength. If it is a local firm, call it revenues of 5 to 10 million, we will seek out the full personal guarantee of the business owner.
Is that typical for the market in the area and in the category?
It is very typical. In previous deals in Smyrna, we were working with a very well capitalized startup. Nobody wanted to sign the dotted line, so we were able to work out a 2-year letter of credit. They gave us $400,000 in the form of letter of credit in lieu of a guarantee. So we can get creative if it puts us in a stronger position, but I don't see us ever signing a lease with a local small business without a personal guarantee.
Yeah, good.
Are there any other questions out there?
Jason, do you have experience or your team have experience leasing this type of product or in this area?
We do. I've worked as a broker in this area for several years, and we've been incredibly active in warehouse and flex space on projects with Michael and on other engagements in the market. It's space we've seen many, many times before. We understand it. We understand what tenants look for, what they ask on tours, what their needs are. So we're able to take all of that knowledge and really create space, like Michael said, that is 80% ready to market. We want to keep our costs down on the customization, and we get there by really going with down the line products that are popular by the masses.
Cool. Thank you.
Thank you, Matt. Well, everybody, thank you so much for joining us tonight. We deeply appreciate your support and sitting through with us on this video. If you have any questions, please reach out to Michael or myself. And once again, thank you for your time tonight.
Thank you.
Thanks to
Thank
both of
you.
you. Sounds
Happy
good.
Thanksgiving.
Thank you. Happy Thanksgiving.
Happy
Thank you.
Thanksgiving.
Take care, everybody.
Thanksgiving.